Imagine being the president of Taiwan. You have a huge, oversized enemy continuously trying to take over your island. What do? Military skirmishes is not a solution. With 2,185,000 active personnel, China has the world's largest army, though not the most powerful. For how long can you fight such an oversized nation? So, how do you get even with your oversized enemy? Well, Taiwan has chosen technology and economic prosperity to get even with China. And for the past 1 year or so, Taiwan is doing exactly that. While the Chinese tech sector is collapsing, Taiwan is growing at the expense of China. Hi and welcome to TFI Global, the foreign affairs and geopolitical analysis arm of the TFI Media Group. I am your host Shubhangi, and in this video I will explain how Taiwan is taking on the rogue paper dragon. Let's begin. The little island nation of Taiwan has become one of the brightest spots in the Asian economy. In fact, the Taiwanese stock market is going through the roof. On Friday, Taiwan's Taiex index made huge gains, flirting with a record high. The benchmark has risen by around 22% this year and has outperformed most Asian peers. Li Fangkuo, a stock market expert, said Taiwan stocks may rise further next year due to strong economic performance, better virus controls, and Taiwan's key role in the global supply chain. So, while China keeps on planning a military invasion into Taiwan, the island nation keeps shining in the world economy. You may wonder what the secret of Taiwan's stupendous growth is and how it hurts China. The growing enthusiasm for semiconductors, or so-called chips, is triggering the record performance of the Taiwanese stock market. The semiconductors are the new oil for the 21st century. They are omnipresent in your life, even though you may not realize it. The semiconductor chips are used in the mobile phone or the laptop on which you are listening to me right now. They are also used in cars and other automobiles and fighter aircraft and other defense equipment. So, the 21st century world just cannot function without semiconductor chips. Presently, the retail markets are bullish on semiconductor companies despite global supply chain disruptions, which is helping lift up the stocks of Taiwanese chip makers. When it comes to chips, there is no match for Taiwan. The island nation holds 63% of the global semiconductor market share. Yes, a small island with an area of just over 35,000 square kilometers controls more than half of the world's semiconductor market. And in terms of semiconductor technology, Taiwan outplays even the United States of America. The island nation accounts for 92% of the world's capacity to make nodes of 10 nanometers or below, and China is way behind. The country has tried raising an indigenous semiconductor industry but has failed terribly. The Tsinghua Uni Group, the leading Chinese chip giant, too, is ridden in debt and at odds with the Chinese government. Much of Taiwan's dominance in the semiconductor industry is attributable to Taiwan's Semiconductor Manufacturing, or TSMC, the world's largest foundry. With the pandemic forcing people to spend more time at home, there has been a sharp increase in consumer electronics demand, and this could further embolden demand for semiconductors. This means a great Christmas for Taiwanese chip makers who supply up to 90% of the semiconductors supplied by the American tech companies. In fact, countries across the world are struggling to overcome pandemic-induced supply chain disruptions in the semiconductor market. Japan and India have already invited TSMC to manufacture semiconductors on their soil. Meanwhile, the chip maker is also considering setting up an advanced plant in the US, as per Nikkei Asia. It would be devastating for China to see Taiwan expand its semiconductor empire into the most developed nations in the world. And worse still, Taiwan is growing at China's expense. While countries are pouring lots of money into the Taiwanese tech sector and semiconductor sector, they're also pulling all their money out of the Chinese tech sector. Chinese President Xi Jinping has been cracking down on tech giants for the past 1 year, which is wiping billions out of the Chinese stock markets. Why is he doing so? Well, because Jack Ma had once met Trump and she thinks that he is an American agent. Well, that's what the CCP seems to propagate, though there are deep-rooted issues like the Shanghai faction in the CCP, which is hated by Xi, but supported by tech entrepreneurs. But that's a discussion for another day. All you need to know is that Xi Jinping cracked down on Chinese tech giants quite unapologetically, so much so that tech traders were reported to have lost $1.5 trillion in China. And as investors realized that investing in Chinese tech stocks wasn't worth it, they pulled out their money from those stocks, and all the money is now getting funneled into Taiwanese chip makers. Taiwanese semiconductor companies are now expanding, while the Chinese tech companies are losing. Taiwan's semiconductor industry and China's collapsing tech stocks are now bridging the military gap between Taipei and Beijing. In fact, the PLA might have to just hold its horses because Taiwan's silicon shield is too hard to breach.